So, for the last year plus, I've been really a proponent of regulation. And the reason I am is that as much as we like the deregulation and kind of this independent currency type thing, if you ever expect big money to come in, and I'm talking about pension funds with trillions of dollars, I mean, just them putting 1% of their assets in Bitcoin would be massively positive for the price of Bitcoin. So I'm coming. Yeah, so a lot of this has to do with the dollar, right? So when you see the dollar continuing to stay at 20 plus year highs and it continues to grind up, it just kills all risk assets. And you can actually watch on an intraday basis how every uptick in the dollar, you'll see the opposite occurring in the Bitcoin chart or in the stock charts of the S&P as well. So a lot has to do with the dollar. We have to keep an eye on rates. Remember, as interest rates rise, there are going to be a certain amount of investors that say, hey, listen, I could get kind of a risk-free return of 5% or 4%. Why am I risking my money in Bitcoin or in the stock market when I could lose 20 or 30%? So there's this give and take going on in the market as the market tries to gauge what the heck the Federal Reserve is going to do in this coming meeting. Are they going to raise 75? Is it going to be 50? Is it going to be 100? And again, the market is just trying to figure out the levels. Yeah, so you're right on that. So we have Bitcoin that flushed early today with the stock market. The stock market was down sharply this morning. It reversed because the dollar began to pull back. And amazingly, I mean, gold was down this morning and then gold reversed basically flat on the day as the dollar came in. And you can see Bitcoin rallying up as well. So the key for me is continuing to watch this 19,500 level on a daily closing basis. The reason why that's such an important level to me is if you go all the way back to the 2017 high, that is the high pivot. And that's kind of the level we've been dancing around for a long, long time. So as long as we kind of hover around that level, there's a small chance that Bitcoin can get some sort of bid. So here it is. And what you could see is basically they're following almost in tune with each other. And I think this is so remarkable because, gold, we've grown up, for the past 20, 40, 60 years that gold was a safety play when things got scary in risk assets. But we can clearly see that's not the case here with gold and the S&P both dipping as Bitcoin has also dipped. And again, the charts are very, very similar in terms of their price action. And again, the key here is understanding that it's the dollar that is causing the movement in both gold as well as risk assets like the stock market and cryptocurrency. Gold has been doing amazingly well. Number one, if any investor out there was fully in gold, they would be thrilled this year, right? I mean, they would be so happy to only be down 5% or so on the year. And the other thing to remember is the gold chart is only down 5, give or take a percent, but the dollar has gone up 15% on the year. So if someone told me that the dollar was going to rise 15%, I would say, oh, well, gold probably should be down 15% on the year at least. And the fact is it's only down 5%, which shows to me it's relatively outperforming what it should be doing. And it tells me to also that you likely are having smart money accumulating, which is why it's not down as much. So I continue to be a huge bull on gold. I think, again, people love to hate on gold, but in reality, it's performed well. I mean, take a look at the euro chart, the gold euro chart, or the gold yen chart. It's an awesome. If you were in those assets via those currencies, you'd be loving gold even more this year. But I think, again, the fact that gold is holding up as well as it is with such a strong dollar is a testament that it's getting ready for a big bull run. So I think Bitcoin still has another leg lower to 12 to 13,000. I think the stock market likely by end of year or early 2023 will tag the March 2020, well, the highs just before the March 2020 COVID collapse. So you're talking about the S&P downside to like 3,400 or so. The key for gold's outperformance is going to be when you hear the Fed pivot. The Fed pivot is going to be key because inflation's not going to be down to 2% or under, and it's going to tell you that the Fed is now more worried about the economy than about inflation. But it's just that idea. So the market is trying to price in how much more hikes they're going to do in terms of interest rates, how much tighter the dollar is going to be, the supply of the dollar. And what the market wants to see is it start to curl down, where instead of a 75 basis point hike after this next meeting, maybe they do 50 or 25, or maybe they go on hold. And what that's going to assume, that the investing public is going to assume that means they're going to go to zero, and then eventually when the economy gets into a bad recession, they're going to start going back to quantitative easing again down the line. Now, it's not for a long time, but you absolutely will see that again when the economy starts to really tank. You could argue that they were more hawkish than any comments we had ever heard from the Federal Reserve. We know it spooked the stock market. The stock market declined dramatically. And when I say they're calling the bluff, is that the bond market is made up of the smartest money in the world, right? It's the biggest market. It's the smartest money. And what you can see on this chart of the 10-year yield is that the 10-year is just back to where it was in June. And so what that tells you is that the bond market says, hey, listen, we don't think the Fed is any more hawkish than they were in June at these levels, even in spite of Jerome Powell's ridiculously hawkish commentary just at the Jackson Hole meeting here. So again, for me, that's telling me something. The bond market doesn't believe the Federal Reserve is going to hike rates that much more. I think, again, 75 basis points is probably what you're going to get on Wednesday. And then I think the Fed very possibly could be on hold after that. So, for the last year plus, I've been really a proponent of regulation. And the reason I am is that as much as we like the deregulation and kind of this independent currency type thing, if you ever expect big money to come in, and I'm talking about pension funds with trillions of dollars, I mean, just them putting 1% of their assets in Bitcoin would be massively positive for the price of Bitcoin. So I'm coming from the investor standpoint where I want to see the price go up. And the only way you're going to get that is if you get a framework of regulation and people actually know the rules, right? So one of the things in the stock market that I've learned over the years of trading is that the market doesn't necessarily care if it's a positive or a negative. They just don't like not knowing, right? They don't like that ability to not figure out what the rules are. So by getting regulation out there, you create a framework where these institutions can say, okay, now we can play in this field. We can play ball because we know the rules and we feel comfortable investing with our fiduciary responsibility other people's money. So I welcome, regulation. No, not a concern for me at all, and mainly because there's too many jobs that have been layered on the crypto side of things with the blockchain and everything else, and there's too many big investors even involved in Bitcoin already where I just do not see that happening. So I think, if anything, it's kind of a scare tactic. They're trying to push people to think, oh my goodness, this could happen, and then when they do introduce some stringent regulations, it won't seem so bad. So again, for me, it's a matter of, Biden realizes, and by the way, there's a lot of politicians out there that do invest in Bitcoin and they're big fans of it. These are the politicians that know that they're running up the debt. They know the future of the dollar, and they're big fans of Bitcoin and cryptocurrency. So they're not going to be looking to ban it. And I think you're going to see that the regulation, whether it's a positive or a neutral or a negative, it's still going to allow for the existence of crypto, just with some rules to follow. So I think the key is to understand that for me at least, I think that a digital dollar doesn't really solve the problem of what Bitcoin's solving, and that you have this stated 21 million run. That's the essence of it. So it can't be printed like the digital dollar. In fact, you could argue that the digital dollar can be printed even easier. And I understand what you're saying where, will the government say, oh, we don't want any competition? But I think you have to look at it and say, if I was a politician, I would be looking at Bitcoin and saying, you know what, it's more of a gold. Why? So they're not going to ban gold then, but they're going to ban Bitcoin. But to me, it's a digitalized gold, so I don't see that being a conflict. And I think the key is Ethereum and some of these other altcoins, you're going to start to see regulation that lays a firm framework where they're going to be classified as securities. We know Gary Gensler has said that. And therefore, they're going to have reporting rules. There's going to be strict rules to report, but I think they're going to be treated much more like equities than kind of currencies. And Ethereum, right? So you have to look at it as the rally from the lows in June. It was about 100+%. And a lot of that was expectation of this merge coming. And really what we see, and we see this with so many stocks as well, is that people buy into these stocks on anticipation of great earnings, and then they report great earnings, and then people are like, okay, well, what's my next reason to own this? I'm up X amount of dollars. Let's sell it. Let's take profits. We'll revisit this in the future. And I think that's what's going on with Ethereum. As much as I love the merge, and I think what it will end up doing will be a positive for Ethereum, it still doesn't solve the immediate issue of the risk and the fear of crypto right now with the Fed being so aggressive. So you're going to see it come down here. I have a major technical level on my chart around $1,250. You can see it just kissed that level right down here coming from this pivot. If it gets through there, you could retest sub 1,000. But ultimately, again, you get down sub 1,000, and I think you start accumulating this for the long term very slowly because it could go lower. But again, you have to think about the thesis with the merge in the long term, but then understand that fear rules the day in the near term. And that's what we're dealing with the Fed right now in the strong dollar. In terms of the chart, Solana is still holding its $26 low down here, so that's still okay. It looks like it's kind of creating some sort of base right now, so you want to see it hold 26. If it holds 26, I think you could easily trade back up as high as $60, but I do caution that for us to get up to $60, we need to see a Fed pivot, and we need to see the dollar start to pull back. So, I mean, that really is the ruling factor. And then long-term Solana, just keep in mind that it's new technology. You have to always be a little careful that something newer and better doesn't supplant it. And I think that's just the one concern. So for me, just to be clear, when I'm looking at what I'm holding long-term in terms of crypto, I'm mainly focusing on Bitcoin with a little bit of Ethereum, but I'm still not willing to commit long-term holds to Solana, Avalanche, and some of these others yet. Avalanche, much like Solana, still holding this low here.
Yeah.
And again, I think the key is this 1350 level. You can see it's still above this, kind of went up, it's coming down. We want to see a double bottom hold right here. So again, I would be a buyer in this range all the way down to about $13.50 to $14. And then if it broke below that level, that's where I would start to be concerned it would head to $10 or so. But again, same thing, your upside, you have great upside potential back to like $30. I mean, it's almost 100% move off that level. But again, the key, that Federal Reserve pivot and the dollar. See this upsloping trend line, so we are holding this support right now. You could argue that you have a little bit of a wedge pattern. Now, wedge patterns, what they tell you, and I'm erasing all the lines except the wedge pattern. Wedge patterns are basically triangles, and price usually stays inside of this until it breaks one way or the other. Whichever way it breaks, that's going to be a big move. That's expected on a technical basis to be a big move. So if it starts to break down, I think at least you test the lows of around 38 cents. If it can break above 50 cents here, then you have upside to maybe 65 to 70 cents there. So again, very interesting to note here. Nice little wedge pattern, but as a trader, you would be on a holding pattern. You would just kind of stay put until you get a break one way or the other.